All right. Well, good morning, everybody. Glad to be here with you today. Today, we're talking about Walmart, and we're taking a look at how to listen to an earnings call. And so looking forward to spending the time with you, sharing some tools with you, some things that we talk about in our classes, and hopefully it'll get you on your way to listening to some of those earnings calls, whether it's your company, whether it's somebody you're interested in, whether it's a customer of yours, whatever the case may be. Well, we're just going to jump right into it as it relates to earnings calls. A couple of staggering statistics that we've found. This is from the Harvard Business Review. We've seen some of it come out in some of our classes as well, but 95% of employees don't understand their company's strategy. That's just amazing. Now, part of that is that a lot of the strategy is related to some of the metrics that are important to the executives, and a lot of the employees don't understand the metrics. As a matter of fact, 90% of the employees don't understand their company's important business metrics. So that creates some challenges. At the same time, the executives certainly want to try to get their employees involved in the strategy of the organization. And so one of the best ways to do that is through earnings calls. So as we think about earnings calls, let's start in on Walmart. This is Doug McMillon. He's the CEO of Walmart. He's been around for years now. I know he doesn't look like he's that old, but he has been around for a while. Can you imagine being the CEO of the world's largest company? That's just staggering. $560 billion that they're doing, or at least they did in fiscal year ending 2021, which ended at the end of January 2021. Largest company in the world. They employ more employees than there are 4 Atlantas. I live in the Atlanta, Georgia area, so that is a lot of people. They actually employ about 2.2 million people around the world, just a staggering number of people. Their sales are greater than 3 companies combined. Matter of fact, they're more than 3 companies combined in Target, Kroger, and Costco. And they another little interesting statistic about Walmart, they sell 1 billion pounds of, what do you think? Bananas every year, over 1 billion pounds of bananas. Matter of fact, that coincides with another statistic that I heard, is that they actually have their inventory turnover on bananas is about once every 7 hours. So they are going through a bunch of bananas. So great company, been around for a while. They actually started in 1962 and certainly have had just phenomenal growth back until then. So as Doug McMillon, CEO for Walmart, what do you need your employees to know? Certainly you got 2.2 million employees. What do they need to know? And what can you tell them during this time? What do your customers need to know about Walmart? Certainly we want to keep growing. We want to keep our customers in mind. I'll share with you some of the things that Doug has said about Walmart's customers and the growth and the I guess really the target toward their customers in the future. So what do you need your customers to know? What do you need your shareholders to know? Certainly the shareholders are always wanting to see growth. And so they want to see plans that are going to help Walmart grow in the future, which will continue to help their stock grow as well. And then finally, what do you need your partners to know? Walmart does have partners. A lot of those are international partners. So they certainly need to understand what's going on with Walmart as well. So Doug needs to think about what do you need to share with your partners as well. So here's my guarantee for you as we go through this. And if you'll make an effort to try it out and do this for 2 or 3 times, I'm going to share a tool with you to help you do this. But really lean into these quarterly earnings calls and try to assess what's going on with those earnings calls. If you can do that, if you'll go through it with us 2 or 3 times, you're going to get it. And as you get it, that means you're going to understand what's going on in the calls better. You're going to understand some of the metrics, and then you're going to start thinking about what you need to do in your particular role to really have an impact on the company, because we believe everybody can. And you're going to start talking the language, and all of a sudden you're going to notice people noticing you and your credibility, your career. You're going to be able to build your credibility, which will also help your career as well as your company. So that's my guarantee. This tool will help you build your credibility, your career, and your company as well. So there's 3 steps to this: prepare, analyze, and apply. It's that simple. And I'm going to show you how to do all 3 of those: prepare, analyze, and apply. So let's start with the preparation phase. All right. So there's several different ways that we could do this. Number 1, we may want to prepare to listen to an earnings call, or we may want to prepare to review the earnings call after it's already done. So I'll take you through both of those. So the first thing that we need to do, well, let me back up just a little bit. So let me tell you a little bit more about the earnings call. There's basically 2 parts to it. Number 1 is the prepared remarks. So these are remarks that are made typically by the CEO and the CFO of the organization. Sometimes there might be other executives involved in the prepared remarks as well. And then there is the question and answer period. Now, this is typically done with the analysts, sometimes with the media as well. And they are asking questions of the executives, trying to dive just a little bit deeper. Maybe they didn't understand something. Maybe they wanted to just get a little bit more clarity around an idea. Any number of things that they might be asking questions about, but usually it's to dig just a little bit deeper. So those are the 2 different parts. Typically, it takes about an hour. Usually it's the first 20 or 30 minutes is the prepared remarks, and then the rest of the hour is usually left for that question and answer period. So let's think about that. So the 3 things we want to do as we prepare for the call or the transcript. Number 1, we need to figure out where the call is going to be. Or we need to find out where the transcript is. And so we can actually do this in a similar fashion. So I just did a basic search for Walmart earnings call, and you can see several different events come up. Walmart investor relations, financial events and webcast. And Walmart only has 1 month in 2021, but that is what they call their fiscal year end. So this Q1 earnings release right here for fiscal year 2021, that was actually last year for their quarter that went from February, March, and April. So that would be looking back in the past. So we're going to click on this Walmart investor relations right here. And that takes us to this location on their website, their investor relations website. Lots of different things that you can get over here. The annual report, which isn't quite finalized just yet for fiscal year 2021. SEC filings. So as a publicly traded company, any public company has to file a quarterly statement with the Securities and Exchange Commission. On a quarterly basis, it's called a 10-Q, and those will contain financial information about the quarter. Those do not have to be audited financials, so those get done a little bit quicker. For the annual report, the 10-K, that's what we file with the Securities and Exchange Commission. Those are audited financial statements. So that's they have up to 60 days to get that information in there. Now, this events line right here, that would take us to this section right here. And this gives us basically all the information that we need in order to be able to prepare for an earnings call. You'll see this over here on the left-hand side, fiscal year 2021 Q4 earnings results. So there's a press release, gives some great information, it gives some dialogue, it also gives the statistics, if you will. You can take a look at the presentation that they do during the earnings call. Walmart has something that I don't typically see with other companies, and that's earnings terminology. So if there's some terms, phrases, whatever that you don't understand, click on that and probably find the information in there. And then finally, the transcript. Now you'll notice this one says transcript investment community meeting. So on a quarterly basis, with the exception of the fourth quarter, Walmart does your standard earnings call. last about an hour, just like we were talking about earlier, 20, 30 minutes on prepared remarks, and then the rest of the time on question and answer. Well, for the Q4 fiscal year 2021, it was actually an investment community meeting. So whatever investors wanted to join were certainly able to join. And this was about a 3-hour meeting. It was fantastic. I had the opportunity to listen to it all, actually to watch it all. So it was actually live. It was video. It was, you could see the executives. You could, the analysts were actually online as well. And so you could see them as they were asking their questions. And typically the executives have their notes back behind the wall, and they're able to answer the questions because they've probably studied up on it quite a bit, and B, they've got their notes there. But Doug and Brett were out there, and they were able to answer all the questions just off the top of their heads. So pretty impressive stuff there. One other thing I'll point out to you while I'm here, you can see one of the press releases on February 18th, which was last week. The board approved a dividend increase in their dividend to $2.20 per share, marking the 48th consecutive year of dividend increases. Now, I'm just trying to do the math in my head. That's about, let's see here, 48 years ago would have been, is that 1963? Is that possible? Is that possible? I'm not sure if I'm doing my math right there or not. They actually only started in 1962. I think I've got an extra 10 years in there or something. But anyway, they've got 48 years of consecutive dividend increases. So just phenomenal results there. Here's the past event. So this is where you would want to go to find the webcast for that investor meeting. And so that is right here as well. So all of that information, the press release, the transcript, any information that you might need is in the investor relations website. So we've figured out how to locate the call or the transcript. Number 2, as we prepare, is review your notes from past calls. Well, Kelvin, what are you talking about? I don't have any notes from past calls because I haven't listened to any past calls. And that's okay. We're going to start building your file from here. So basically, this workbook that I'm going to take you through will help you in your note preparation. So as we get to next quarter, you're going to be able to look back at your notes from this particular quarter. And when we get to next year, you're going to be able to look back at 3 or 4 quarters worth of notes. So you're going to have that opportunity, and you're going to start building those files now. And then number 3 is to meet with your team. Meet with your team to really discuss the earnings calls. Maybe you have a group of employees that report to you. It'd be great to listen to the call together or to go over this information together, because some people may look at things differently than you do. If you're a sales team and you're selling into Walmart, it's great to see what is on the horizon for Walmart. A lot of times, matter of fact, I had somebody tell me one time when they listened to an earnings call and read the letter to the shareholders, oh my gosh, they're telling us how to sell to them. All we have to do is just listen. So meet with your teams, talk about what you hear, what you learn, and how you should approach Walmart in the future, or any other customer for that matter. So those are the 3 things that you need to do before the call. Locate the call or transcript, review your notes from the past calls, and meet with your team. Simple as that. Now, let's dig in just a little bit more. We're going to get into the analyze phase, but first of all, I want to share with you the foundation really for this tool. And you see on our screen now, these are what we call the 5 business drivers that all successful companies focus on: cash, profit, assets, growth, and people. So cash, we talk about cash position. That may also be referred to as cash on hand. Or as we look at it on the balance sheet, it's actually going to be referred to as cash and cash equivalents. Cash equivalents being short-term investments that will turn into cash in 90 days or less. So in our classes, we'll talk about cash position, and we'll also talk about cash flow or cash from operating activities. How much cash does a company actually need to have? Is it possible to have too much cash? How do we spend our cash? So those are all around the cash driver. And of course, the foundation for the cash driver is the statement of cash flows. Our next driver is profit. And of course, that ties to our income statement. Basically, there's two things on the profit driver that we can impact. Number one is we want one thing to go up. We want the other thing that can impact the profit driver to go down. So the thing we want to go up would be revenue. So what can we do to increase revenues? Number two, what do we want to go down? And that would be expenses or our costs associated with that. So if we can increase revenue and decrease expenses, we are going to improve our profit. We also could increase prices if appropriate as well. So that's our profit driver. Assets. We've got a number of different assets at Walmart: stores, distribution centers, inventory, cash, plants, property, all kinds of different things, and goodwill too. We can talk about goodwill a little bit later on as well. So lots of different assets at Walmart. And then we've got growth as our next driver. By the way, assets ties right into the balance sheet. We've also got liabilities as well as equity on the balance sheet also. So growth. Haven't met a CEO yet, or a shareholder for that matter, who wasn't interested in growth. So certainly we want to focus on that as well. And then people, right at the center of our model here. It takes people, both internal customers as well as external customers, to be able to make all of this happen. There's lots of other people associated with the people driver as well, but those are the two primary ones that we're talking about. So that's really the foundation for our courses. That's the foundation for how we're going to analyze this earnings call, listen to and analyze this earnings call. In many ways, we're really looking at the financial statements through the lens of these five drivers. All right. Now, here's the tool. Now we're getting into it. So on the left-hand side, the executive alignment activity. Pretty simple exercise, actually. So we've got the transcript, or we can just listen to the call itself. Now, each time we hear the executives talking about one of these five drivers, I want you to make a little hash mark beside the appropriate driver, whether it's cash, profit, assets, growth, or people. As you total these up, all of a sudden you'll start realizing that some of the drivers were talked about more than others. So those may be the drivers that are getting the most attention from the executives at this point, and ones that they're really driving as part of their strategy within their organization. So after you get all those hash marks beside the appropriate driver, then you can total those up, and you'll get an idea of which drivers are getting the most attention, which ties right into one of our first questions. I'll go over that here in just a second. Now, if you've never been through one of our classes before, we've got some definitions for these drivers here as well. So you can get a feel, you can kind of look at that and see if it fits in with one driver more so than another. Also, as you listen or as you read through the transcript, they may not mention the specific drivers. In other words, they may not mention cash, but they may be talking about cash, even though they're not saying it. So as an example, if they talk about dividends, that would be an example of cash, because guess what? We pay dividends in the form of cash. So if they talk about increasing the dividend like we did for the 48th time in a row, well, guess what? All of a sudden now we've got dividends, we've got growth, and guess what? Who do we pay dividends to? People. We pay dividends to our shareholders who qualify as people. So take a look at some of the examples as it relates to these five drivers as well, because you want to listen for those as well. As we move on along into the workbook, I mentioned the 4 questions over here, 4 pretty simple questions. But first of all, the first question is, which business drivers seem to get the most attention and why? Now, you can't really do question number 1 until you've done the executive alignment activity. By the way, this could be any executive communication that you do this with, whether it's the transcript, whether it's the letter to the shareholders at the end of the year. Any number of executive communications could be done with this. So which business drivers seem to get the most attention and why? So it's one thing to figure out which one's getting the most attention, but why is it getting that attention? So you want to pay particular attention to that as well. What were 2 or 3 main points the executives were trying to make? I can tell you, Brett Biggs, the CFO for Walmart, I bet he mentioned at least 8 times, maybe more than that, something about operating profit growing at a rate faster than sales, which is something that we would like to see happen, something that they would like to see happen as well. And so I think when somebody mentions it that many times, it's something that they want to try to get across. And so I think that was one of his main points. Question number 3, what are the goals, trends, and objectives going forward? What are the goals, trends, and objectives going forward? So now they're talking about the future. What are they trying to accomplish in this next year, this next quarter, or maybe even further out than that? Question number 4, what key questions or concerns were raised by the analyst community? Now, in this investor meeting that Walmart had, they actually had 2 different question and answer periods for the analyst community. In a 3-hour presentation, you can kind of imagine that. So they had some prepared remarks, they had analyst questions, they had a break, they had more prepared remarks, and then they had another section of analyst questions. So I always love the questions, and quite honestly, a lot of those questions, all of those questions relate back to our 5 business driver model as well. So these are the questions that we want to focus on after we get through with the executive alignment activity. Let me share with you a couple of different quotes from Doug and from Brett. And show you how this ties back into our 5 driver model here. So there's Doug, our CEO at Walmart. So his first quote was, "We're building a new customer-centric business model. Our customers welcome us serving them in new ways." Okay, great. So which driver does that tie back to? Driver or drivers, I should say. I love this because we're building a new customer-centric business model. So in other words, in another statement that he made, he actually talked about, we're putting customers in the middle of our future plans. Well, guess what? We've got people, customers, in the middle of our foundation here, in the middle of our 5 drivers. Now, I don't think Doug has ever taken our class before, but I'm glad he's thinking the way that we're thinking. Now, the next one, and our assets and capabilities are being monetized in ways we haven't tapped into before. He made it a little bit easier on us this time. He actually mentioned the term assets, so we're gonna tie that one back in. Are being monetized. Now, what do you think about when you think about monetized? I think about probably either cash or maybe profit, or both for that matter. So being monetized in ways we haven't tapped into before. We have assets. There's that asset word again. To leverage, whoops, sorry, there we go. We have assets to leverage, like our stores and supply chain, strengths like our store traffic, and a brand trusted for value. Now, made it a little simple, but at the same time, we have to think about some of these. So we have assets to leverage, like our stores and supply chain. So he's calling our stores and supply chain assets. I agree wholeheartedly. Strengths like our store traffic. Oh, what driver would our store traffic belong to? Obviously people fits right into that. And then a brand trusted for value. What do you think that brand represents? I would say a brand is one of the best assets that we have. And so that's certainly tying right back into that. And then finally, we're starting to drive the top and bottom line in more expansive ways. So top line, bottom line, what is that? That relates back to our profit driver. So in case you haven't heard this before, top line is always going to be our revenue. Our bottom line is always going to be our net income. So every sentence that he had there tied right back to our 5-driver model. Now, as far as Brett goes, Brett Biggs, he's the chief financial officer. Brett knows his stuff. You can tell just by listening to him. His first comment is, this spend will allow us to fully optimize our strategy. Now, what do you think that ties back into? I'm going to go with spend is kind of like cash. And then will fully allow us to fully optimize our strategy. Now that strategy, that could be just about any one of these, I think. So it's hard to say 100% for sure. All right. Now, next sentence. And in turn, accelerate the company's top line and profit growth rates. Made this one a little easy on us. That obviously ties back into profit. And I think we saw, a lot of companies during the year 2020, who did see some of their plans, some of their strategies accelerating because of what was going on with COVID-19. And then obviously we see profit and growth right in here. These investments should put us in position for 4% plus sales growth and operating income growth rates higher than sales. See, there's another mention of operating income growth rates higher than sales. So we've got a lot here. These investments, that's cash, should put us in position for 4% plus sales growth. Okay, so we got growth. We've got sales also, which when I think about sales or revenue, I think of profit, because we increase sales or we reduce expenses. And then operating income, profit driver, growth rates, growth higher than sales. So, and then our last sentence finally, 4% top line growth. I think this is just a cool statement here. 4% top line growth would basically be the equivalent of adding a Fortune 100 company every year. Can you imagine that? Some companies never even make it to Fortune 100, and Walmart is adding the equivalent of a Fortune 100 company every year. Now, he said a mouthful in terms of the 5 drivers there also. Top line, profit, growth, the equivalent of adding a Fortune 100 company every year. So that could be assets, that could be any number of things as well. See how easy it is to tie these statements back to the model and help us through the executive alignment exercise. So here's my final results. Now, don't let this scare you because there's a lot of numbers here. Again, don't forget, it was a 3-hour investor meeting, so there's going to be a whole lot more transcript than a typical earnings call. Now, I've got these split up into 2 different groups here. You'll see on the cash driver as an example. The hash marks on the left, those go back to the prepared remarks. So all of those numbers or all those hash marks on the left, in other words, there were 39 comments by the executives that were related to cash in some form or another. There were 21 comments once we got to the question and answer period with the analyst. So either the analyst asked a question about cash or the executives responded with an answer that related to cash, or maybe a combination of both. So altogether, we got 60 comments around cash, 104 around profit, 110 around assets, 113 around growth, and 130 around people. So lots of discussions about people. So you can see that really there was one on the high side, there was one on the low side, and then there were kind of 3 in between. So I narrowed it down to 3 being people, growth, and assets. So now I'm ready to move on to my questions, my 4 questions. Let me put it in this size here so it's a little easier to read. So our first question was, which business drivers seem to get the most attention and why? So people got the most attention, or at least it got the most mentions. And some of the things that stuck out to me. And if you've read any news about Walmart in the last week, you've probably seen or heard this first one anyway. 425,000 people just got a raise. That's a ton of people getting a raise. That also says to me, we're getting ready to spend a little more cash. With all those people getting raises, what's that going to do to our profit? Which, interestingly enough, that kind of came up a little later on in the question and answer period as well. But a lot of people getting raises at Walmart. A lot of opportunity in front of us. And when they're talking about opportunity, they were really talking about there's a lot of opportunity for these employees and invest in our associates. We've got Walmart Plus, which is a membership opportunity for Walmart customers so that they can save on shipping, gas, groceries, and all kinds of other things to be put in the future. And then I like this one too, 75% of store management starts as hourly. That's a pretty nice record to have and a pretty nice testimony in terms of a potential career path for an hourly employee who starts at Walmart. And certainly a nice place to spend your career. In terms of growth, talked a lot about operating income growth. Record sales is $560 billion, which is just huge. I think about a 1% growth rate for Walmart. That's about $5 billion. And they grew they grew about $30 billion last year. Record cash flow of $36 billion. Record cash flow. So they're continuing to grow their cash flow as well. 79% e-commerce growth. They talked about how soon there'll be $100 billion in e-commerce, and it won't take long after that to get to $200 billion. U.S. grew, just the U.S. alone grew net sales $29 billion, which is similar to the annual revenue of Dollar General or Starbucks. Growing profit through high margin businesses in advertising, financial services, marketplace, healthcare services. How many of you even knew that Walmart made any money off of advertising or financial services or healthcare services? I'm not sure that I knew that. Well, I can pretty much tell you I did not know that until I was doing the research for this particular presentation today. I didn't know Walmart was giving out COVID vaccines, but they have been very instrumental in doing that. And then grew top line almost 7%. So 7% growth on a $560 billion company is really saying something. And then finally, the third driver that stood out was profit, making money in new ways. And that was really what they talked a ton about, making money in new ways. They're still going to go about it the old way as well. They've still got their stores. They've still got a tremendous pickup and delivery opportunity at business too, for that matter. New brands and marketplace growth, diversifying profit base, data monetization. They've been giving their data away, but they've found some opportunities where they can actually monetize that and actually make something. Last mile delivery. More and more people are getting closer to their stores where they're delivering their product, eliminating waste, contribution, profit improvement. And then just right here, $4 billion in COVID expenses in 2021 alone. A lot of companies certainly had a lot of expenses related to COVID. Walmart certainly had its share as well. $1 billion alone in Q4. So those are the three drivers that seem to get the most attention to me and why I felt that way. Now, what are the 2 or 3 main points the executives were trying to make? Number one, Walmart's already a huge company, but there is so much opportunity still in front of us. We can make it true that in 2021, this company was just getting started. Wait a minute. Wait, Kelvin, did I just hear you right? In 2021, this $560 billion company is just getting started. Doug made a comment about the CEO back in the 90s, talking about how they were going to add groceries, produce, food, everything else in the grocery side of things. So now they had to get bigger stores. That was the superstore that kind of evolved out of that. And in the 90s, this particular CEO made the comment, we're really just getting started. We're big, but we're just getting started. So Doug McMillon is making that comment now in 2021 that we're big, yes, but there's so much opportunity in front of us as well that in 2021, we're going to be able to look back and say, we were just getting started. That's phenomenal for a $560 billion company. Number two, investing in the future of the business in associates. Give good returns to shareholders. When I think about returns, I think about basically typically that term typically responds to or applies to how much money did we make. So our shareholders want to see good returns. They want to see good returns from Walmart, so they get good returns from us. Accelerating investments in supply chain, technology, automation, and associates. And investments will accelerate top line and profit growth in the mid to long term. So just a number of different investments. As a matter of fact, there was one question about investing in the future. Why not spend more now? And Doug made the comment that if we see that we need to right now, I'm going to be in that camp. So yes, that is a possibility, but we think we're going about it the right way at this point. And then finally, number three, for a big company, they grew 6.7%, including U.S. growth of $29 billion. Greater than, I mentioned this one a little bit earlier, greater than annual revenues of Dollar General and Starbucks at $23.5 billion. All right, number three, what were the goals, trends, and objectives going forward? This was probably a little easier to communicate if you saw the pop-up whiteboard on stage with Doug McMillon when he was going through this. But basically, think about it as a flywheel spinning around with a bunch of different assets on it. But basically, today's vision of Walmart is really emerging and growing and evolving as they come along. But basically, think about it from the middle. Well, I'm getting ahead of myself now, but how will they serve the customers and drive operating income growth? Starting with customer in the center. We've heard that before, okay? So think about this flywheel. You've got a customer in the center, lowest prices on the items they buy all the time, okay? That's kind of the model of Walmart and has been for a long time. Anybody know what EDLP means? I had to think about this one just a second, but being a customer of Walmart, I figured it out pretty quick. Everyday low price, EDLP, everyday low price. You may even see EDLC, everyday low cost, as well, as certainly a motto of Walmart as well. We want to earn the primary destination position with customers. Doug talked about when he was younger, and his mom would talk about, hey, Doug, I'm going to Walmart. What do you need? You need anything? Walmart was the primary destination for them when he was growing up. And that's the goal of Walmart today, is to make it the primary destination for their customers. Customers can visit a store. They can pick up an order. They can have it delivered. They can have it delivered into a secure box. They can have it delivered into a garage refrigerator or all the way into their kitchen, even when not at home. So certainly that is evolving with customers beyond our wildest dreams at that point. And this is the interesting part too. And this is where I think that Walmart may have a leg up on some others. Delivery will come from the stores, Sam's Club, fulfillment centers. It doesn't really matter. It could be even, they don't really care where the delivery is coming from as long as they can get it delivered. So with the different stores and distribution centers and fulfillment centers that Walmart has, they've got choices. Walmart does. The customer may never know exactly where it came from. And then Walmart Plus and data to serve the customers better. So they're all about the data. That's how, there's some stories that we actually talk about in our classes that because of the data, they're able to serve the customers even better. Now, that was in the middle. If we go to 3 o'clock on the flywheel, this is where e-commerce, health and wellness, and financial services comes in. More services geared toward the customer to help them live their life better. 6 o'clock on the wheel, monetize the capabilities in the marketplace, advertising, data, and fulfillment. And then finally, back around to 9 o'clock, reinvest back into the customer value proposition. So All this information focused on the customer and then reinvest back into the customer as well. All right, what key questions or concerns were raised by the analyst community? Number one, higher capital spend, specifically around capacity in new stores. So part of what they're talking about doing is they've got these existing stores, they've got room to expand those stores and increase capacity for more deliveries or pickup for their customers. Also mentioned that future capital expenditure investments could be in the neighborhood of 2.5% to 3% of sales. Start doing the calculations on 2.5% to 3% of sales at $600 billion. You're talking about some pretty serious cash going in for investments around capital expenditures. Wage investment, they know they're going to give out additional wages to their employees. They're very focused on when that happens and the ramp up period, where it may or may not happen. I mentioned a little bit earlier, one of the analysts said they've got extra cash, which they do right now. Why not go ahead and invest more now? And already mentioned the answer from Doug. Questions about the new businesses discussed around the flywheel. Advertising, really? Healthcare, really? Financial services, really? And certainly it's moving in that direction. Thoughts on debt and using it for additional share buyback. So one of the questions was, hey, debt's cheap. Why don't you take out more debt and buy back additional shares? And it wasn't, they may, I guess, is the best way to answer that question. Certainly not opposed to it, but not necessarily just jumping at the opportunity to do that either. All right, so that's it. That's the tool for listening to an earnings call. Now, let's take it just a little bit step further. So we've prepared, we've analyzed. Now we've got what we call navigating the financials. All right. So we've talked about some numbers already. We've got the financial statements as well. Walmart's great about having their financial statements ready for this particular earnings call. So what we're going to do is I love the format of this. Basically, we've got the four out of five drivers over here on the left-hand side: cash, profit, assets, growth, and people makes it all happen. Then across the top, we've got our key metrics and equations. So our first one is cash and cash equivalents. And the line item that we'd be looking for would be cash and cash equivalents. So then the next column tells us where we can find it. We don't have to remember this. If we forget, it's okay, because we can come back to this and figure it out again. So take a look here. Where do we find it? It's either on the income statement, the balance sheet, or the statement of cash flows. This particular one, cash and cash equivalents, can be found on the balance sheet. So if we go to the balance sheet here, you can see typically on the balance sheet, you're going to see more liquid to less liquid from the top to bottom. So here's our assets in this section right here. So cash and cash equivalents as of January 31st, 2021 is $17,741 million. You can see that these numbers are in millions. So we actually have to add 6 zeros to these numbers to make them the actual numbers. Quite a bit more cash than this time last year at the end of January. So we'll fill that in right here, $17,741 million. Our next one is cash from operations. We can find this on the cash flow statement, not on the income statement or the balance sheet, but on the cash flow statement. So let's take a look at that real quick. Now here's our cash flow statement. You can see up at the top, cash flows from operating activities. So this is the entire section right here. And here you get to net cash provided by operating activities. $36 billion in 2021, up from $25 billion last year in 2020. So 36,074, million. We're going to fill that in on this line here, cash from operations. Now, total revenue. We're hitting all three statements really quick here. So total revenue, you can see, is on the income statement. So we've got the 3 months ended January 31st, 2021 versus 2020. Or we've got the fiscal year ended same time frame. Let's go ahead and do the quarterly numbers now. So that would be $152,079,000,000 in total revenues. Now let's take a look at this too. I want to make sure we realize this. We've got net sales of almost $151 billion, but we've got membership and other income of over $1 billion as well. So we want to make sure we get the total revenues line, not just the net sales line, because that's the total impact there. So 152 billion. So we've got that filled in on our next line. Now, net income, we're going to find that on the income statement. We're looking for the line item net income. So I'm going to go on down here to my consolidated net income attributable to Walmart. We actually got a negative net income in 2021 for the quarter. Now, we're not going to spend a whole lot of time on this, but basically the other gains and losses was about $5.5 billion, which was some losses that they had on some of their partnerships in the UK and in Japan. So that contributed to the loss in 2021. So $2,091,000,000 loss. Let's put that in here for question number 4. Now, question number 5, net profit margin. Both of these are on the income statement, but guess what? It's the two numbers that we just got, net income and total revenue. So we fill those in. I've already done the math for you here. Basically, negative $2,091,000,000 divided by our revenues of $152 billion gives us a negative profit margin of 1.37%. Okay, so that's how you do it. Pretty simple stuff there. You find the metric, you figure out which statement it's on, you go look at that particular statement and fill in the numbers. I'm going to go ahead and fill in the rest of the numbers here. We'll take a look at some of these in particular. You can see cash jumped up quite a bit from last year. Cash from operations jumped up quite a bit. By the way, a lot of companies had extra cash that they were hanging on to as part of the pandemic. In these times of uncertainty, I think it was Doug who mentioned it, or Brett, it's not uncommon and certainly no surprise that we've got a little extra cash right now. Nice increase in revenue, and you can see down here that grew about 7.3% year over year. Now, we can do this quarter over quarter, this quarter, fourth quarter versus last year, the fourth quarter. Kind of nice to see the comparisons there or the differences. We can do this on a full year basis, so fiscal year 2021 versus fiscal year 2020. Here's you've got the total revenue of 559 billion versus 523 billion last year. Let's see here. Net profit margin for the full year was 2.4% versus 2.8% last year, so down just a little bit. And then we can see some of our growth rates down here. Now, we can also compare it to another company in the same industry. Certainly when you talk about, or when you hear people talking about Walmart these days, it seems like they're also talking about Amazon these days. So why not compare Walmart to Amazon for the full year? Now, it's interesting. This says fiscal year 2021 for Walmart versus fiscal year 2020 for Amazon. This is only 1 month younger year than the one for Amazon. Amazon's ended December 31st. Walmart's ended January 31st. Just this year. So a couple of interesting notes here. $42 billion in cash versus 17 for us. 66 billion versus the 36 billion for Walmart. So Amazon's got some pretty strong numbers there. Now, Walmart still has, what is that? Not quite $200 billion more in revenue. So Amazon does still have some catching up to do there. They've got some margins, higher margins than what Walmart has. Still would probably fit into the low margin category in terms of net profit margin. And let's see, they actually had some pretty nice numbers in terms of growth, 37% revenue growth, and then 84% net income growth. We learned when we talked about Amazon, a lot of their profit is coming from Amazon Web Services as well. So it'd be interesting to see kind of apples to apples between Walmart and Amazon. Now, last month we did Google or Alphabet. So you can see some comparisons there. Google has a little more cash than we do. They've got more, almost double the cash flow than Walmart does. Again, nowhere near the amount of revenue that Walmart does. I thought it was kind of interesting too. Kind of some interesting statistics as it relates to profit, net income. Google at $40 billion versus $13 billion for Walmart. And that's on a company that's what, $400 billion almost higher in revenue. But guess how many stores Walmart has? 10,800 stores worldwide, 150 distribution centers. I don't know how many Google has, but I'm guessing it's nowhere near that many. Walmart has inventory of $45 billion. Inventory, $45 billion. Google has inventory of $999 million. So tremendous differences in terms of how much inventory. Now, can't go down that path without going down this path too. Google still has more assets than what Walmart has. 319 billion versus 252 billion. And a lot of that is in their property, plant, and equipment. So good growth numbers with Google there as well. So that's the tool for navigating the financials. A pretty simple tool. Now we've done that, we've prepared, we've analyzed. Now we just need to apply. So let's figure out how to do that. Mom used to say to know and not to do is not to know. So we want to know because we don't want to know and not do. So let's do that. So let's apply. What new insights did you gain as a result of your analysis? Based on what you've learned, what are the 3 actions that you'll take? So number 1 is, as far as my insights go, Walmart is a very well-managed company. I don't know, not that I was thinking they weren't before this research that I did, but certainly they are a very well-managed company. To be able to go through the pandemic, grow 500, or not grow, but actually achieve $560 billion in sales, have any profit, to keep the employees that they had, to get them started in new career paths. They had to hire new employees as well. They got to be a great managed company. Much more innovative than I realized. I really thought that their growth was limited. I usually think about, gosh, Walmart would be doing good to grow 1%, which would be $5 billion. But here they are growing almost 7%. Can't wait to see what happens next. Also found it interesting. I mentioned this a couple of times. Operating leverage, 8 times they mentioned it, and growing income, operating income faster than sales. And Brett Biggs, the CFO, he said, and you should expect that from us as investors. So he's telling us as investors how we should think. And it's true. We actually talk a lot about that in our classes. Based on what you've learned, what are 3 actions that you'll take? Well, being a facilitator for Acumen Learning. I talk about Walmart on occasion, but I did more research probably for this call than I've done on others. So I'm going to be tuning into their earnings calls on a regular basis and completing the quarterly call workbook. I want to start following them just a little bit closer. Explore their pickup and delivery options. I knew that they had these in place, but it seems like it's just such a great option. I need to check into that a little bit. I don't really do pickup and delivery with any store, but certainly probably need to try that. And then finally, use them as a benchmark company, or at least discuss Walmart during the growth driver during a lot of my classes. Great benchmark company, especially as it revolves around that growth driver. So that's basically prepare, analyze, and apply. Now let's think about who you're going to be analyzing. And so maybe you're going to analyze the company that you work for already. After you've done that, I would recommend that you meet with your manager and talk about what you found during that analysis, and make sure that you're aligned with your manager in terms of, okay, what are the 3 things that you should be doing to be able to apply? If you've analyzed a customer or a partner, meet with your sales manager or account team to talk about what you all found. Make sure that you are all in sync with the strategy, with the go forward plans. Create some leverage in your sales discussions about account plans. And then if you've analyzed a competitor or benchmark company, let me recommend you meet with your manager, talk about what you found, the differences, the comparisons in the two, and how that can identify actions that you might want to take, need to take, or maybe even what directions the company could be going in as well. So that's it. Prepare, analyze, apply. Let me just ask you real quick. So the three things that we said that we were going to do, we said we're going to locate the call or the transcript. Number two, I've left blank for you to fill in. I'm going to go ahead and fill it in for you, though. Review your notes from the past. And then finally, meet with your team, whether that's your team of employees, whether it's a sales team, whether it's a marketing team, whatever the case may be, meet with your team to review. Now let me give you a challenge. Who are you going to analyze? I don't need company names, but is it going to be a company that you work for? Is it going to be a company that you sell to or compete against? Is it going to be a partner, or is it going to be somebody you might be interested in investing in, or just a company you're interested in following? Certainly, we've done a lot of companies that are worthy of following over the last several months. Now, if you're going to do the analysis, I've got to get you a tool to be able to do that analysis. Let me tell you a little bit about Acumen Learning real quick. We've been around about 18 years. We've worked with 30 of the Fortune 50 companies. We actually had one of our customers who brought in a third party to analyze the impact that the training had on their employees. And you can see the 6 results that came out of that analysis. Some pretty nice results here. So increased collaboration, improved upward communications, improved employee engagement, increased business focus, improved teamwork, improve the performance of your business or function. So a lot of great results there. We'd love to talk to all of our customers and figure out where they fit into some of those as well. But that's something that you could expect. By the way, we do in-person classes. We do virtual classes. We do earnings calls. We take a deeper dive than this with a lot of our customers and really dive in deep on their customers, on their own financial statements, and really understand what do we need to be doing as a result of the results that we've achieved for this last quarter. So here's where you can find the workbook at acumenlearning.com/webinar. Let me tell you, there's a couple of other things there for you as well, but certainly you want to get a copy of the workbook, and you can certainly save that as one of your files. Keep a blank copy around for the next quarter as well. That will include the Navigating the Financials workbook as well. There's also $100 off of our online learning. Great new award-winning online learning that is available now. It talks about the 5 drivers as well as the financial statements. So that's a great benefit to have there. And then also coming up on March 25th is going to be our next webinar doing the same thing, looking at another company as well. If you'd like to, you can even recommend which company you might want to see as you sign up for that. So that's it, folks. Thanks for your time today. Been great being with you, and maybe look forward to seeing you on the next webinar as well. Have a great day. See you later.